Hi, everybody. Welcome. I'm Whitney Roseborough, the marketing manager here at Squire. Thanks for joining us today for our BOI reporting webinar. Before we begin, I just want to point out that we do have a Q&A section where you can type any questions that you may have throughout the presentation, and we will do our best to get those answered at the end. Now, let me introduce you to our awesome presenter today. We have Brandon Alfrey. Brandon is a CPA partner and the tax practice area leader here at Squire. With over 2 decades of experience, his focus includes individual and business tax planning, consulting, and compliance for business owners and closely held companies. When Brandon is not helping his clients, he loves to spend his spare time with his family, playing and watching sports, camping, and trying to learn new things. So with that, take it away, Brandon.
Thanks, Whitney. Thanks for the introduction, and thanks everybody for being here. We're excited to have you join us on this hot July day. It's a little cooler today than it has been, so that's nice. We are here to talk about something that not a lot of people know about. You may have heard about this before. It's kind of circulating, and as the year goes on, we're getting more and more questions about this, and so we want to be able to help people to understand what new requirements have been put into place from the government reporting, on some reporting issues for especially small businesses. So we're going to move through here. So that's what we're going to talk about today here. So our agenda, we're going to talk a little bit about the Corporate Transparency Act, which is the problem with the problem. That's the wrong word, but the reason why we're here, why we're doing some of this today. And then what the Corporate Transparency Act's requirements are about beneficial ownership information, what it is, who needs to report. You can see all the information here. So we're going to go through that, walk through some examples for you today. Hopefully that will help to go through there. So we'll get started. As questions come up and you chat them in, Whitney will try to jump in and we can help answer some, or we can wait till the end as well. So let's jump into the Corporate Transparency Act. So this is actually part of an act that was passed by Congress back in 2020, and it's aimed to help the government track money laundering, terrorist financing, and other related financial crimes that come in and out of the country through various sources right there. So this is not dissimilar to laws that are in other countries. The U.S. has just jumped on board and said, hey, we probably need to help to figure out what's going on here. So rather than this being like a tax compliance filing or anything like that, this is strictly a measurement and a reporting mechanism to help the government understand who owns entities in the country and what ways money can come in and out of the country. And so that's what this is. And so it mandates that every corporation, LLC, S corporations, partnerships, sole proprietorships have to report this beneficial ownership information. And we call it the BOI for short. So if I say BOI, this is the beneficial ownership information. And this is what needs to be reported. And it's all because of this Corporate Transparency Act that's trying to oversee and understand how money is coming in and out of the country to keep the country safe. So we'll move into what are BOI reporting entities. So we already said we have S corps, corporations, LLCs, even sole proprietorships. These are considered entities that need to have their ownership information reported. And this is reported not to the IRS, but to a different department of the Department of Treasury, which is the Financial Crimes Network. So we say FinCEN because we like acronyms, but it's the Financial Crimes Network, or Financial Crimes Enforcement Network to be exact, actually. But they're the ones who are taking these filings. So we don't file anything with the IRS, but we file directly with this FinCEN group. And so every domestic entity, so we're going to take this into 2 parts, right? So if you have a domestic company and you've registered that company in a state, so in the state of Utah, like where I'm at, if you registered a domestic company with a state with their Department of Commerce, you are now automatically required to file your beneficial ownership information to the FinCEN group. So that's one side of it. The second side of it is if it's a foreign entity and it has a branch in the United States and it has registered with a state Department of Commerce or whatever or a similar name, they also have to file that beneficial ownership information as well. Now, this also, if someone registered with a tribal government to register a business inside of a tribal land, it would be the same thing. So, as long as any company has registered with a state to operate within the that business, you have a beneficial ownership information filing requirement. We get a lot of questions that come up at this point that say, "Hey, I'm just a sole proprietor. I just do things on my own. I've never made a separate LLC. I haven't got an EIN. I haven't gone to the state and done anything with filing a separate business. I report something on my Schedule C. Someone gives me a 1099. If you haven't gone in and set up a company and registered it at the state level, then you don't have to file a beneficial ownership information report. But if you have, then created an LLC, if you've got a sole proprietorship and you've registered it, some states do require that, and so that would require you to do a BOI filing. So, and you think, wow, that's a lot of things for the government to track, right? That's a lot of companies that have registered with the state. Well, they do have some exemptions that are here because they have a lot of information that are already there. There's a list of 23 exemptions for companies that don't have to file here. Most of these exemptions, however, are because these industries already have registrations or requirements to file in other ways with the government. And so they can track them in other ways instead of having to have another BOI exemption. So there's several that are here, and there's lots of details in each one of these. But I want to highlight a couple of them that we think are the most important for individuals and companies to know about, that they might be exempt from it. So the first one is if you're a publicly traded company and you're registered under the Sarbanes-Oxley Act, then you're automatically exempt because you already have other reportings right there. So those large businesses are the ones that are really, because they already have so much scrutiny and so much other reporting they have to do with the government, they're exempt from this. The other one, we call this a large operating entity. And so if you have 20 or more employees who are based in the US and have a physical office in the US, and your gross revenue on your prior year tax return was over $5 million, you're considered to be a large operating entity and exempt from having to file a BOI report this year. So you have to hit all three of those qualifications, though. 20 or more employees in the US, over $5 million in revenue on your prior year tax return, and have a physical office in the US. So you've got to have all of those in there. So what this mainly hits is we're looking at smaller companies, single owners, just a couple owners, small businesses. This is what's going out there. Like this requirement hasn't ever been out there before, so it's kind of a big deal that you have to get this and put this reporting to the government so that you meet the requirements there. And we'll tell you why as we go through here in a little bit. So, who are beneficial owners? We have beneficial ownership information we have to report. So who are beneficial owners that have to be reported in this? So there's two definitions for beneficial owners, and it gets kind of tricky. So we're going to walk through some examples in just a little bit too to help you walk through here. So the first one is anyone within that company or entity structure that exercises substantial control over the reporting company. And we'll talk about what substantial control means as well. Or you own or control at least 25% of the ownership interest of a reporting company. So it's not as simple as just saying, hey, I have 4 owners in a business and we each own 25%. Can you just take our 25%, take our 4 names and we report these in here? Like, no, is there anybody in your company that also has substantial control? So it's not as easy as just looking who's on the ownership records for a tax return reporting and putting that in there. There's some additional work that needs to get in here. There's not a maximum number of beneficial owners who have to report here. And so that's why we have to look at what the requirements are and why you need to report these. So let's talk about that substantial control. There's 4 general criteria. So the first one is you're a senior officer inside of a company. And so a president, CEO, chief operating officer, something like that. You're automatically deemed to have substantial control in the company. And if you're an owner or not, you would be required to be part of the beneficial ownership information reporting for that company. So also, if you have the authority to appoint or remove officers or directors, if you're an important decision maker, or if there's any other way that you can control the operations of the company. Those are the 4 criteria that are there. There's some information on those slides that are there, which we'll send out to you, so you have those as well that are there. But these are all people who may or may not have ownership, right? They just may be operating within the company, getting paid a salary to do something that, you know, like everything with the government, there's exceptions to some of this, but as a general rule, this is what needs to be reported for someone, or what someone with substantial control, how they define someone with substantial control. So go from there. So that's the first part. The second part is an ownership interest, right? So actual physical ownership. So anybody who owns at least 25% of the company has to be reported. And that ownership interest can look at stock, a capital interest, a profits interest in an LLC, any stock options. The other one that we get here is a convertible instrument, right? Which is really just a loan that could be converted to stock. And that has to be considered as well in the ownership calculation of this here. Now, we need to make a clarification here, right? So you can own less than 25% and say, oh, I don't have to be reported in the beneficial ownership. But you also have to look at, is there someone who has substantial control? Who's directing the affairs of the company or of the entity? And someone would need to be named having control over that. And we'll see that in the examples as we go through here. But someone has to be named as having substantial control who operates and runs the entity. You can't just not file the return. Someone's in charge of it, and so you have to be there. And the examples are going to show this as we kind of go through there, right there. And we'll go through it in just a second here. So here's some steps to help you to identify who are beneficial owners. So we have the first step is to identify those people who exercise substantial control. And then the second step is to identify the ownership interests in the different forms. And then step 3, we have to calculate the percentage of ownership interest held directly or indirectly to see if they meet the 25%. So we want to see who has substantial control. We want to see who the owners are. And then we need to see what thresholds get hit as we go through here. So I want to go through some examples to help us to understand this. We'll start simple and we'll get more complex. We've got 4 examples to go through. So the first one is a simple LLC ownership. Pretty easily, right? So we have a limited liability company. It's owned by one person who owns it 100%. They've registered it with the state, so they have to file. Here's what happens, right? Automatically in both circumstances, both as having substantial control because they're the person who owns and operates the entity, makes all the decisions, they have substantial control, so they would automatically qualify from there. But then the second part of it is that, hey, they own more than 25%, they're the only owner. They qualify in both circumstances. That one's really easy. So when we go to file the BOI, the entity is the reporting entity. And then the individual has to report that they have beneficial ownership in that entity. And we'll talk more about what has to be reported as we go, after we get through the examples here. That's a really simple example, pretty straightforward right here. So let's look at a little more complex. We have a corporation. It could be an S corporation. It could be a regular corporation. Either way, both need to report. So the company's outstanding ownership in this example, they have 3 people who own the entity. You can see that on the bottom right there. Individual A owns 50% of the stock, individual B owns 40% of the stock, and individual C owns 10% of the stock. And then they have individual D, you'll see up top, who acts as the president of the company but doesn't own any stock in here, right? And so let's see what happens, what the reporting happens for this one here. A little more words here, so I'll try to talk through it right here. So when we walk through here, the real answer is A, B, and D are the people who are beneficial owners who need to be reported here. Individual A, because they own 50% of the stock. Greater than 25% automatically gets considered that they're a beneficial owner that needs to report. Individual B, same situation. They own 40%, greater than 25%, right? Individual C owns less than 25%, so we exclude them from that. Then we say, do they have substantial control? Are they operating in the company? With no other information here, we would say, yeah, they don't. Right? They aren't a beneficial owner for reporting purposes because they don't have substantial control, or they don't own 25% or more. But individual D is the one here. It's the company president. They're the ones who are running the company day to day. They're making the decisions. They're pushing it along, helping it operate and grow and those kind of things. Because even though they don't own stock, they have substantial control, so we consider them to be a beneficial owner, and they need to be reported in here as well. All right, let's go to a different LLC with 2 different owners, for example 3. And then we have another individual who's helping to run this as well. So in this situation, the individual or the LLC has 2 managers, people who are managing it day to day. Individual A, who is an owner, and individual C, who is not. Individual B isn't a manager but owns 50%. So let's flip over here. So we'll just walk through each of them. So individual A, this one qualifies in both cases, right? They're a manager making decisions day to day and influencing how the business runs. So they automatically have substantial control as their title as a manager, and they own 50%. So they qualify easily. We have to report that individual on the BOI filing. Individual B, not a manager, but owns 50%. So they're automatically have to be reported on the BOI filing as well when we go through here. And then individual C, similar to the prior circumstance, even though they don't have any ownership, they're making decisions to run the business and are in a position of trust and influence within the company. And so they also will have to be put into that beneficial ownership reporting as we go through there. So substantial control is making this a little bit harder when you go through and say who's actually helping to run the companies. And so that's the purpose of the examples, is to say, hey, we need to make sure we know what's happening here. Let's do one more example. And this one talks about indirect ownership, which is kind of a layering of different structures here, which you'll see a little bit harder right here. So we have a reporting company that's a corporation at the top. Underneath on the next layer, we have direct owners. So this company is owned by 2 other companies, which those 2 companies on the third layer have individual owners of those companies. So it makes it a little bit more complex as we go through this to say, how do we calculate this? And of course, we're going to throw in individual F who directs important decisions through board representation, as you can see right there. So this one's going to be a little bit more complicated as we walk through it, because we can't just take and say company Y and company Z are the ones who need to report, because it's not companies that have to report their beneficial ownership information. It's the individuals who own the companies. And so it makes it a little bit more difficult as we get through here. So we'll walk you through this. We'll try to go slow, make sure it makes sense so that we get there for you. But the highlight of this here is that individual A, individual B, individual C, and individual F are the people who are going to have to be reported as beneficial owners. So let's help tell you why, help you to get through this. Individual A, you can, probably too small, I'll go back so you can see it here. Individual A is the CFO of this reporting company. And so they are holding one of those substantial authority positions that's there. So we automatically think, oh, we probably should include them. You can see individual C is the CEO and the president. So we've got issues there. And individual F, we talked about that they're on the board of directors. So let's go back here again. So individual A, they are a senior officer, chief financial officer. They have substantial authority or substantial control. So they meet the first step. Because they have substantial control, we could just stop there. But in this example, we also want to show how the indirect ownership gets them to have substantial control, greater than 25% ownership as well. So they indirectly own the reporting company, both through company Y and through company Z. If we can look, the chart's small there again. We've shrunk it down to put the words on the screen right here. But company Y owns 50% of the reporting company, and individual A owns 30% of company Y. So we multiply those two percentages together, the 50% of company Y 50% that company Y owns of the reporting company, and then the 30% that individual A owns of company Y, to multiply and say, hey, they own 15% of the reporting company. It's just taking their proportion of it directly on that ownership scale. But individual A also owns company Z. They own 25% of the stock of company Z, which happens to happens to own 50% of the reporting company as well. So we do the same thing. We take 50% times the 25% and get 12.5%. Now we have to take that ownership and say he owns 15% and 12.5% through two different avenues, and we add those together and they get 27.5%. He automatically goes over the 25%. He has a controlling interest as owning that. And so either way, individual A meets the qualifications to be reported on the beneficial ownership filing that's there. So individual B at this point, they don't have any they don't have any substantial control. They just own 70% of company Y. And so we take the 70% that they own and times that by the 50% that company Y owns of the reporting company, and they get 35%. So individual B meets that threshold of having greater than 25% ownership indirectly through owning 70% of company Y on the reporting company. So the reporting company has to put individual A and individual B onto the beneficial ownership filing report. So let's keep going, walk through this a little bit here. Individual C is the CEO and the president. They actually have some indirect ownership, if you can look through there as well, through company Z, but it's 25% of company Z. So they only own 12.5% of company Z, but that's not enough to have the ownership control, right? But because they're CEO and president, they do have substantial control, substantial authority to direct the affairs of the company. They're going to have to be reported on the beneficial ownership as well. So We have individuals D and E right here. You can tell they're in a triangle form right here. So you can tell, hey, they probably don't have to be reported on this. And we just look at their indirect ownership as well. They own 25% each of company Z. They only own 12.5% indirectly. So because it's less than 25%, they don't have ownership, and they don't have substantial control because they're not holding positions in the reporting company. And then individual F is on the company's board of directors. They're making important decisions. They're helping to direct the strategy, the ownership, the direction, whatever it may be. They are in a position to have substantial control. And so individual F will also need to be reported on there. So that's a lot of individuals, that's a lot of there, but this is the kind of nuance that you have to go through when you're looking at, hey, we have multiple layers of ownership in our entities that we have to go through. So we have to go through and help to identify what the actual ownership percentage is, and then identify who actually has substantial control as we go through that. And so these are the steps that we go through. This is a pretty good example of a way to do that as we get through there. Right. So enough charts and graphs for a minute. Let's talk about what needs to be filed. What actually has to be filed when you go to report these individuals, like we've just been going through. For the reporting entity, you have to report the full legal name of the company and any trade names or DBA names that you're operating under when you're right there. You have to report the business address, and then what state or tribal jurisdiction you registered in or formed in, and then of course your taxpayer identification number when that comes up. So that's pretty simple. That's the reporting entity. Where it gets a little bit more muddy is in the beneficial owners. So said the reporting entity does the reporting, but they have to list all the beneficial owners that are there. And so each beneficial owner that's identified, they have to give their name, their birth date, their address, and their unique identifying number and issuing jurisdiction from an acceptable identification document. So you're looking at Social Security numbers as identifying number, any other taxpayer identification number, but then you also have to have an image of record that shows your birth date, address, name. So typically we'll see passports or driver's license. That'll be the things that'll be most common that have to be submitted with the information. Yeah, and that's a photocopy of that that needs to be submitted as you go through there. And that's the hard part, because each individual owner needs to supply that to do that. And so chasing that down sometimes could be a little bit harder to get that, because that has to be, you have to have that photocopy with it. You just can't give the information. It'll be an incomplete filing, and you don't want that because they can come back and fine you for that. So what happens if you don't file these, right? There's penalties, right? There's not a cost to file. It's not like a tax you have to pay when you file this or anything like that. But if you don't file it, either unintentionally or willfully, you can be fined, you can be sent to jail. If you put something on there that's fraudulent, you can also have the same information there, right? So the same outcome. So you have civil penalties up to $591 for each day that you don't file on time. You can have criminal penalties, including imprisonment for up to 2 years and or a fine for up to $10,000. If you're a senior officer in a company that fails to report the BOI, you can be held accountable for that failure as well, not just the owners. So you have a responsibility to make sure that that filing happens. And then, if you're supposed to file and don't, or if you fraudulently report something, you can be subject to these penalties as well. So we want to make sure that people don't have these situations. We're here to help inform and help to provide a way to help you to make sure you meet these requirements and get them filed. So when do you need to file by, right? So you don't have this problem. So here's the deadline. If your company was organized prior to 2024, if it was formed and it's already been operating prior to 2024, you have until January 1st, 2025 to get this filing done. Gives you time. They've given a kind of a leeway to get caught up and that kind of stuff there. If you organized a new company into 2024, you have 90 days from the date that you organized that company to make this filing. And maybe it's happened, maybe it hasn't happened. There are some ways that we can help to recover and make sure there's no penalties for not filing on time in the first year, and that's fine. And then if you organize it, say a new company next year, right? They take that 90-day period and say, now you've got 30 days. So the 90-day period is an introductory for the first year. But now it's, if you wait till 2025 to organize a new company, you're only going to have 30 days to do that. Now, here's the fun part about all of this, is that you could file and say, here's all my beneficial owners. I know who has substantial control. I know who has over 25% ownership. Here's the information that's there. But what happens if it changes, right? Somebody else comes in, you get an owner that you transfer ownership information, somebody else buys in, anything like that, right? Maybe you hire a new CEO or anything like that, it's a new CFO, somebody to come in that might have substantial control. Then you have to change that filing because the FinCEN requirements are that it has to be current. And so anytime that you have a change in what you originally filed, you only have 30 days from the date of the change to make that change with the FinCEN filing. And so this is kind of something you have to keep on top of to say, hey, if I add somebody, I lose somebody and add somebody new in, I've got to rechange that and update it. That's a requirement in this FinCEN reporting, so that they have the most current information at all the times. And if you don't make that change within that 30 days, you could be subject to those penalties. And so it's something to evaluate when something happens. It needs to be put on a checklist when you have somebody with substantial control that comes in that wasn't there before, or if the ownership percentages change along the way. So there. All right. These filings can be done on the FinCEN website. They have a downloadable PDF form. You can fill it all out, and then you can scan and then attach a document, the photocopy of the driver's license or passport or whatever it may be, and you can submit it up through there. Each beneficial owner would have to go and do that on their own for your company right there. We've looked at it, we played with it. It's pretty cumbersome because you have to download it and fill it out individually, and then you have to get the pages and submit it all at once and that kind of stuff. So we want to try to provide a way to help it make it easier for you to help file these and to be able to update it if you need to in the future. And so we have a solution that's technology based through our website to simplify the process, get the required information, and to reach out to each beneficial owner and have them securely upload their own copy of their passport or driver's license or whatever. It allows you to save your company time because you can more quickly and easily send out the information. It saves the information automatically so that if you need to make a change, you can come back in and we can help you make a change and hurry in refiling it. And it's a one-click submission when you get all the information entered and uploaded. It comes to us. We make sure that everything is filled out, make sure that we've met all the requirements, and then we can automatically send that into FinCEN for you without you having to figure out how to do that. And so here's our pricing structure that we have established to help do that. We have If you're just having to do one filing, it's a $500 charge. You can do up to 2 filings for $600, up to 7 for $1,500, right? So there's some economies of scale here. If you have multiple companies that you need to report, this is, this kind of says, hey, you don't have, we can save that information. And so it's easier to do multiple times. And that's why you see, as we kind of go through, like we structure a lower cost if you have to do more of these, just because we don't have to do more work to put more information into it right there. So it's a way for us to kind of help through that process, help you to get it. And like I said, because we're taking this information and we have it in a way that's easy to access, easy to update. These filings are quick and easy to do. We've seen people do these in 10 or 15 minutes, have it done and over with, and then have all this information ready for us to review and then to update in the future, because we already have all the documentation provided. We don't have to go back and fill out a new form when something changes along the way. All right. So what are the next steps, right? Obviously, I mean, you can go to the FinCEN website. You can do this on your own if you'd like to. We're here to help. We have a link here that takes you right to our tool on the web and goes through our website. You sign up, you put in there, start getting your information in there. There's ways to ask questions and request help along the way as we go through there. You can also contact us to help you get started on that one. So obviously my name's on here on the bottom, but our main contact for this is Buck Spillner. He's here to help answer questions and point in the right direction and help the filings go through the process as we get through this. So it helps us to have someone here to help you get the stuff that you need. We know there's a lot of questions. We've had a lot recently as this is making more and more news in the press about these things happening and needing to be done. We've got this team in place, and we have more people behind the scenes here to help get all this done, but we've also enabled this technology through the website to make the information gathering as simple and easy as possible for you as we go through there. I'll stop there for a second and see if there's any questions that have come in. Whitney?
No questions so far. If anybody wants to chime in, like I said, the Q&A is open and you are welcome to type in your questions. And just so everybody knows that's attending, I will, if you RSVP'd, we have your email, and I will send out Brandon's slides as well as a video recording of the entire presentation.
Okay, I was gonna walk into the tool if we needed to. The tool's pretty simple, and when we walk in there, when you log in, it's just entering the company information, the address, the EIN, what kind of company you are. It'll actually help you to determine whether you meet any of the exemptions as well, whether you need to file or not file when you go through that. So the tool then works to once you identified the beneficial owners, you can put their information in and their email in, and it will send an email to them to ask them to provide their copy of their passport or driver's license and their information, and it'll automatically pull that back in securely and help to update that so that we can monitor that as it comes in. So it's a really simple tool to use to go through there, but our team is here to help do that if you need help to do that as we go through it. So yeah.
It doesn't look like any questions have come in, so if we want to wrap up here, we can.
Okay. All right. We'll do that. Well, please, let us know if you have questions on how to do this, anything that comes up. Our team is here ready to help, like we said, to get through there. The biggest things are identifying that, hey, I do have a reporting entity, and even though you may have multiple owners and you own less than 25%, all each individually, there's someone that still has substantial control that you need to figure out who needs to be listed on that beneficial ownership as having substantial control. And so someone needs to be reported. The worst thing that we could have happen is to have everybody say, hey, I don't own 25%, so I don't need to do this filing. And then to have this FinCEN group come back and say, hey, I'm sorry, we didn't get an application from you, and we're going to charge you these fines for not doing it. So understanding those substantial control issues is important to know that's there. So and then each entity on its own has to determine whether it is a reporting entity or not. Most, if you meet the exemption, you don't have to file. If you haven't registered in a state, you don't have to file. But other than that, you probably, this is something that needs to be done along the way. So let us know how we can help you.
A question did just come in.
Perfect.
It says, we have a 6-member LLC, equal ownership, 1 member runs it. Who needs a BOI?
Yeah, so the entity is a reporting entity, and the 1 member that runs it has substantial control. So they're the only ones who need to be listed on the BOI form. Yep. So that's that substantial control rule to figure that out. So yeah, that's there. So there's various ways, and we know there's various entity structures that are out there that need to be examined to figure out ownership, to figure out substantial control, to figure out exemptions, those kind of things. One thing to look out for in here is that if a trust is an owner in any of the entities, that trust gets looked through to either the grantor of the trust or to the beneficiaries of the trust, depending on the type of the trust. So those are a little bit more complicated and probably need a little bit more discussion on an individual basis as we walk through those to help understand that. But you can't list a trust as the beneficial owner. It has to go down to an individual inside of that needs to be figured out in that process as well. So a little more nuance that's there. You think it's a little easy when you're like, oh, I just have to report the ownership, but it gets a little more detailed when you get into the specifics of it. Even in the exemptions, there are some specifics that you have to pay attention to as we go through that. So happy to answer questions from our team, from our side, if you have any of those. If you log in to use our tool, we get notified immediately, and you can notify us within that tool that you have questions or would like some help, and you can contact us, but we've listed our contact information here as well. So hopefully this helps explain a little bit about what these new requirements are and when it needs to be done by and why it's so important. We want to say thanks for joining us, and we look forward to helping you out and talking to you soon.